story is we believe that preserving...
Long story.
I'm going to give you the... It's long, but I'll give you the short version.
Not a short.
Yeah, we're long. Right. So we believe that preserving the 30-year prepayable fixed-rate mortgage is like the bedrock of the housing system. It's critical. We think the only way to do it is by preserving Fannie and Freddie. We don't think it's viable for a new private sector solution to emerge. So what our basic thoughts are that Fannie and Freddie were really great institutions that took very little risk. They guaranteed interest and principal payments on mortgage-backed securities. Beginning in the early 90s, they really dramatically changed their business. And they became like hedge funds. They went and bought a whole bunch of mortgage-backed securities. They issued a ton of debt. They became massively levered institutions that needed access to capital. They started buying subprime mortgages and all-day mortgages and guaranteeing all-day and subprime mortgages. And that put them at meaningful risk, which is why they ended up being taken over. And we think the right answer is that Fannie and Freddie should, in some sense, we should wind down the old Fannie and Freddie and rebirth them as new Fannie and Freddie. And new Fannie and Freddie go back to the old business, which is just being a guarantor of interest and principal payments on mortgages, winding down the business of fixed income arbitrage, which is a business they should never have entered, and focus on guaranteeing middle-class mortgages for credit-worthy borrowers. And if you do that, interestingly enough, the taxpayer makes about $400 million because the taxpayer owns 79.9% of both of these companies.
Yeah, that's what I don't get. They have got a massive amount of these penny warrants the government does.
That's right.
Fannie and Freddie.
That's right.
Assuming Fannie and Freddie are worth $40, that's $320 billion of taxpayer money that if Fannie and Freddie went away would be wiped out.
Yes.
Why don't more people care about that?
You know, I don't think people have done the math or focused on it or even thought about Fannie and Freddie being a viable alternative, because all that we've heard from Washington has been we're going to wind down Fannie and Freddie. And a lot of that, I think, is emotion. Fannie and Freddie were pretty abusive in the way they walked the halls of Congress and threw their weight around as lobbyists when they lobbied, years ago. And I think that leaves a lot of people with that taste in their mouth. But you have to remember is, number one, the 12,000 people who didn't cause the problem who still work for both of these companies. So those are like real jobs, and they happen to be in D.C.
All right, well, there are also a lot of
So I'm sitting here with Elizabeth Harrison, long-term shareholder.
Took stakes in them when things were bad, and when they turned it around and things improved, much like Fannie and Freddie, the government then sold them to the public markets and made a ton of money.
Yes.
Why haven't they done that here?
That's exactly what we're recommending. Now, the same playbook at AIG, the same playbook at Citigroup should apply here. Take an institution that lost its way, maybe it's undercapitalized, maybe they got into businesses they shouldn't have gotten into. You think about Citigroup, you think about the Volcker rule, right? Banks shouldn't have been in the business of a lot of proprietary trading for those.
If you've remotely watched or read any news since 2008, you've probably heard bits and pieces about Fannie Mae and Freddie Mac. And if you're one of those people that have heard bits and pieces about them, you might not know exactly what they do. Both Fannie Mae and Freddie Mac are government-sponsored enterprises, or GSEs. Fannie and Freddie actually played, and still play, a key role in obtaining an affordable home mortgage. We have to start with how a loan is started first, at a bank. What typically happens is a person walks into the bank and requests a loan to buy a house. The banks, of course, are glad to oblige, so long as the borrower can qualify financially. Of course, for their work, a bank is going to charge a fee to do your loan and make sure the home seller gets their funds. Now, what the bank has is a note saying that they will receive monthly payments from that borrower over 30 years. Let's say the mortgage is $1,000 a month or a $200,000 loan. The banks are going to hold onto this loan, and over time, that same $200,000 will be worth almost $360,000. Not a bad profit, right? However, another home buyer, and then another, and another, and all these customers come in wanting a loan to buy a new house. Banks, however, have a rule. They must keep a certain dollar amount balance in their possession at all times. If this bank has $10 million and they continuously give away $200,000 loans to perfectly qualified buyers at a rate of 1 loan a day, they will have 0 loans after 50 days, not even 2 months. But these banks want your business. Not only can they make a large percentage on the home loan, they can make fees each time they do one for their work. So how do they keep business flowing? This is exactly where Fannie and Freddie come in. To simplify all the details, the bank sells the $200,000 note to Fannie and Freddie. These two huge government-sponsored entities don't necessarily care about keeping that particular dollar amount balance, like the bank does. They live perfectly comfortable lives with $1,000 payments over time. Fannie and Freddie pays for the $200,000 note, and the bank gets to keep all the fees from setting up the loan. Fannie and Freddie get to keep all the $1,000 monthly incomes, but the bank gets more money to give to new customers, and new customers are able to find and buy homes. Fannie and Freddie's main goal is to keep that dollar balance in check with banks that can continue to give loans to buyers. Could you imagine walking into a bank to get a home loan and they basically said no because they couldn't afford it? What if every bank said that? What would happen to the housing market? The circle of money has been going on for decades. However, there was a problem that happened recently. Fannie and Freddie got lazy. Again, to simplify the problem, since banks sell these loans to Fannie and Freddie, guess who makes the rules on who is a qualified borrower? That's right, Fannie and Freddie. And what happened during the 2000s was that Fannie and Freddie kept bending their rules about who was qualified. Before you need credit, 30,000, not the big deal. Before you need to have 3 or 5% down. During the 2000s, of course you could buy with no down payment. Before you needed to have a stable job and an income, during that time frame, you could just say you made whatever you wanted and they wouldn't even look twice. Therefore, these two giant companies that were expecting millions of people to pay on their mortgages got a really rude awakening when people just stopped paying. Now that $200,000 note that it would have been worth $1,000 a month over 30 years was worth zero. And so was the next one, and the next one, and millions of others. Now at this moment, some government officials want to completely dismantle Fannie and Freddie. The National Association of Realtors, along with other government officials, are saying, no, that's doing too much. Let's just fix things. And this is what's causing people to look at Fannie and Freddie more closely nowadays. Out of the two government-sponsored entities, worth over $4 trillion in assets, mess up so badly. So what's the future for Fannie and Freddie? Nobody really knows yet. What's likely to happen is they won't completely be stopped and shut down. I would personally imagine they reform the structure of it so huge mistakes like this aren't made again, and that some checks and balances be put in place to oversee everything that's consistently working smoothly. Whatever the outcome, it's going to have an effect on you if you're trying to buy or refinance your home. Now that's good to know.
We got to talk about one of the biggest investments that people ever have, and that's their home. Something recently just happened in New York. A big thing, with Secretary Paulson coming on TV talking about what? What is he talking about?
About the government takeover of Fannie Mae and Freddie Mac?
The government takeover of Fannie and Freddie Mac. Now let's kind of educate people what they are, because people don't know what they are. Who wants to turn it down?
Well,
You take one in mind, you take the other.
well, Fannie Mae started, I think, back in the 1930s.
Right,
And, the purpose was to have an opportunity for people to purchase homes, obtain mortgages at low interest rates over fixed terms over extended periods of time. And it went on for about 30 years and was operating fine. And then they realized it was a bit of a monopoly, for it. And then they brought on Freddie Mac.
Bottom line is this. In terms of Freddie Mac and Fannie Mae, essentially, they provide liquidity to the housing market. And they assist local and regional banks to be able to loan more. Bank A and B, they give you a loan on your home that puts leverage on their books. Freddie Mac, Fannie Mae, they come, they buy that loan from Bank A, B, C, and your local banks. Now Bank A, B, and C continue to give you more lending. They own the mortgages themselves, Freddie Mac and Fannie Mae. They keep them themselves, or they bundle them and sell them in the secondary market to other borrowers such as Bear Stearns and others in the form of mortgage-backed securities and CMO program. So that's what they do. They help individual small banks provide liquidity. What happened was they got so overzealous, and starting back in 2000, they wanted to start. They went into the high-risk market, alternative adjustable mortgages, and other mortgages, interest-only mortgages, helping individuals who typically couldn't get a loan. They wanted to help provide, give houses. However, somebody has a 550 FICO score, they can't